BitMEX founder Arthur Hayes issued a warning on May 1 that Bitcoin holders should not expect Michael Saylor to protect their BTC wallets. The message reinforces a key principle in the crypto world. Custody responsibility ultimately rests with the individual. Hayes, who co-founded the derivatives exchange BitMEX, directed his remarks at those who might assume that high-profile advocates like Saylor are somehow safeguarding their holdings. This is a reminder that no public figure, regardless of how much Bitcoin they hold on behalf of a company, is responsible for securing another person's wallet. The warning comes at a time when Michael Saylor's company, Strategy, is actively expanding its Bitcoin treasury. As of May 18, the firm acquired 24,869 BTC and now holds 843,738 BTC in total. That level of accumulation can create the impression among retail investors that prominent holders are somehow protecting the broader market. But Hayes is drawing a clear line between public advocacy and personal security. A company buying Bitcoin for its balance sheet operates under its own risk framework and custodial infrastructure. That is not the same as securing individual investor wallets. Saylor himself has taken positions that touch on custody transparency. He has argued that proof of reserves. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Is a bad idea, a stance that adds nuance to the custody debate Hayes raised. Proof of reserves is a mechanism that allows investors to verify that an exchange holds the assets it claims to. Saylor's opposition to it suggests he does not believe in the necessity of such transparency for institutional holders. This stance can be confusing for retail participants who interpret corporate accumulation as a form of implicit support for their own positions. Hayes' message is clear. Public advocacy does not equate to wallet protection. A company buying Bitcoin for its balance sheet is making a strategic financial decision, not a personal security guarantee. Individual holders who store BTC on exchanges or in custodial wallets are not protected by the actions of high-profile investors or institutions. The risk of third-party custody remains a key issue in the crypto space. The stakes are high for retail investors who may not fully understand the difference between institutional accumulation and personal custody. If a company like Strategy is buying large volumes of Bitcoin, it can create a narrative of long-term conviction that some investors interpret as a signal to hold or buy. But that narrative does not extend to securing individual wallets. Investors who rely on third-party custodians or exchanges are still subject to the risks of those platforms, including hacking, insolvency, or regulatory actions. Hayes' warning is particularly timely as the debate over custody solutions continues to evolve. With more institutional players entering the market and accumulating Bitcoin, the lines between public advocacy and personal responsibility are becoming more blurred. Retail investors need to be aware of where they store their assets and who, if anyone, is responsible for securing them. The uncertainty lies in how retail participants interpret institutional actions. If a company like Strategy continues to accumulate Bitcoin, it could be seen as most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. A bullish signal, but that does not mean the company is responsible for protecting individual wallets. The distinction is subtle but important. Retail investors must take ownership of their custody decisions and not assume that high-profile figures or institutions will act as a safety net. The next signal to watch is whether other prominent Bitcoin advocates take similar stances on custody responsibility. If more figures begin to emphasize self-custody and personal security, it could shift the broader market perception. For now, the message is clear. Bitcoin holders must secure their own assets, and no amount of institutional accumulation changes that fundamental truth.